Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Kevin Hinks over at the Cboe. Time now for our cash tag segment. For that, let's bring in our next guest, and that is Megan Brantley, Vice President of Research at LikeFolio, taking a look at Alphabet Google today. Megan, happy Friday to you. So Alphabet Google taking a little bit of a step back today, but the stock has had some strong performance on a year-over-year basis. You've got new sentiment data. Can you walk us through what that looks like at a high level first?
Yeah, whenever we look at Google, of course, this is a massive company. You could talk about streaming, you could talk about autonomous vehicles, you talk about cloud. And I think that probably the biggest story right now, at least in our data, is Google's leadership in the cloud market. So Google has been chasing AWS for some time, and we're really seeing signs that not only, is it taking market share, but this is a segment that is booming across the board. And you can see here, these are those visits to the Google Cloud platform, up 24% year over year. This shows just a massive acceleration. And when you look at how the growth rates came out for all of these companies, Google, Microsoft, Amazon, all of them were growing faster than they were a year ago, but Google Cloud really had a nice quarter, with revenue up about 63% year over year. That's the fourth consecutive quarter of acceleration in that growth. And so this is just an area where Google is excelling. And then just at large in the last year, you look at the stock run, I think it's up 140% year over year. And part of that is because it's really shifted the narrative from AI victim to now AI hero. And so I think that this is certainly an AI winner. And this cloud segment right here is what to watch. And I think this is a really important metric that we'll be tracking to see, will it continue accelerating at the rate that it has been?
Megan, your data is so important here because if you can look up the numbers and, AWS is about 31%, Azure's about 24%, Google Cloud is about 12 to 13%. But your data shows what the real story is, which Google is the fastest grower of these three. And even though they're, if you think of the size of Google Alphabet and the fact that this part of Google Alphabet, cloud infrastructure, can grow so much going into the future, it's really quite impressive when you think about how much they can still grow, how much market share they can still take from someone like Amazon or even Azure. Megan?
Yeah, and this is an industry, this is kind of like a rising tide lifting all boats, or I should say all boats except for Microsoft this quarter. But, the industry spend just in the first quarter, I think, was $129 billion, which was the fastest growth in 4 years. And so this is an area that's absolutely exploding. And as you mentioned, Google has kind of the smallest piece of the pie, but it's expanding that piece of the pie more rapidly. So definitely something to watch moving forward. And then, other areas of strength just in general, big questions were about, is Google going to be punished because the way that consumers search and find information, using AI to get answers, will they continue to turn to Google? And we actually just saw Google search revenue accelerated 19% in the quarter to 60 billion. So Google is finding a way to, keep people on its platforms, on its system, and cloud is certainly, though, that shining piece in its portfolio right now, at least in our data, that really shows how it's kind of separating itself from the rest of the pack.
Megan, just to tease out what Kevin was talking a little bit about, the divergence that you're seeing between Alphabet, Google, and AWS and Azure on that chart, where there's a contraction on the other side. Is that a case of Alphabet, Google gaining more market share and overall slowing growth here? Or is it that just, it's just the pie is, let me see how to frame this. Is Alphabet, Google just gaining more market share and we're seeing a broader slowdown in general?
I think that there's a bit of the pie is getting bigger, and then Google's piece of that pie is also growing faster. So while all of them, you look at that, it looks a little bit alarming. You see AWS and Microsoft, that growth rate looks negative, but really for us, this is a mark of acceleration. And so we have Google continuing to accelerate, and maybe we see a little bit of a slowdown in that acceleration from Microsoft and AWS, but at large, that cloud usage, that is, AI is dependent on cloud infrastructure, and that usage is actually absolutely booming right now. So we do see this pie at large getting bigger, and we see Google taking a larger piece of that pie, if that makes sense.
Megan, one last thing here. The 90-day consumer demand, right?
Yeah.
This stock, no matter how good we think it is and how well they're doing and how some of the clouds have dissipated, it looks like the price of the stock is caught up to your demand numbers. Should investors be concerned? The stock has already plateaued slightly, come off the recent high. Should they be concerned that maybe this price has caught up to the overall health of the company?
I think that this is somewhat normal, especially after the nice move that we saw after earnings. Google is proving that it can continue to beat an extremely high bar. Even last earnings, it would have been hard to believe that the company could put up the numbers that it did, and it easily cleared the bar. I think the shares rallied 10% after that earnings. So certainly something to keep in mind as the bar continues to be raised. But so far, Google's been able to clear it. This is a tough company to bet against. It's almost in the company of an NVIDIA, where it's tough to bet against this stock right now. It certainly has tremendous tailwinds, whether you're looking at the change in search, whether you're looking at AI usage, whether you're looking at autonomous vehicles, like we talked about, or streaming. Even YouTube, whenever we break out streaming partners and talk with you guys, YouTube is the top streamer when it comes to consumer eyeballs. So Alphabet has a massive portfolio. And so certainly a tough name to bet against. But as you mentioned, valuation certainly is high, but it's not to say that the stock can't go higher. So this is one that for us, we're still bullish Google long term. Near term, we'll see how that shakes out. But for us, we're watching that cloud year-over-year change, as I mentioned, and we're watching it continue to grow its piece of the pie. So we're not betting against it at this point.
So not betting against it, but given that divergence that we're seeing, how long do you expect that divergence to persist over the next few quarters, where Alphabet Google is the leader compared to AWS and Microsoft?
Yeah, we've certainly tracked this for a couple of quarters now. I think for the last maybe 2 or 3 quarters before earnings, we saw Google really pulling ahead in that lead. So we'll certainly be watching. I will say that, AWS has actually done a little bit better recently. I know even last quarter, its cloud growth reaccelerated again. So definitely something to watch. We'll see how long it can maintain that lead. But for now, we haven't seen any signs that Google is kind of losing that momentum that it's had the last couple of quarters.
All right, no signs of slowing down there for Alphabet, Google, and the cloud over there. Thank you, Megan. That is Megan Brantley, Vice President of Research at LikeFolio. Now, for the trading perspective of all things Alphabet, Google, Kevin, you got a lot of insight.